Good morning, Will.
Hey, Dima. Thanks for joining us, everyone. We're starting the morning show.
Good morning, everyone.
Hey, everyone. Thanks for joining us. Remember, we're also streaming on YouTube Live, so put any questions into the YouTube chat, which was very active this morning. Like us and follow us on, subscribe to us on YouTube. And Dima, you want me to share our disclaimer?
Yeah, let's start out with that. And good morning, everybody. Thanks for joining us. Couple things right now. We're just going to put up the disclaimer and just a reminder. Will and I, Market Chameleon, we're not registered investment advisors or broker dealers. We're not telling you what to do. We're just sharing ideas. If you need a professional advice, then go out and seek a registered investment advisor or call your broker with any questions. There's the disclaimer really quickly.
Awesome. So what's going on in the pre-market, Dima?
So let me just share my screen really quick, and a couple things note I think we talked about yesterday. I think this week we're going to see some numbers, PPI, CPI, inflationary numbers. We'll keep an eye out on that. As usual, we're just going to start out with what's going on in the pre-market hours, and this is a report that is showing stocks that are trading in the pre-market hours. They're actively trading. We have the most active stocks, the biggest percentage gainers, the biggest percentage decliners in the pre-market. We'll do a couple earnings. We'll see what's going on with some stocks that are expecting earnings to come out in the near future. We'll also maybe talk about some option strategies if we have time and answer any questions. So this, as usual, I just start out with the biggest, what's going on in the biggest gainers. And we can see like some small cap stocks, 63 million market cap, 6.7 million market cap. These are up pretty big in the morning. This one, EYEN, up 114% on 5 million shares. There's some news on it. It looks like it's some kind of a healthcare stock. There's OXBR, that's up 88% on 4.9 million shares. That's a 6.7 million market cap, very low. Looks like it had reported earnings yesterday and so on. I'm going to check really quick, Will, just to see if we got anything moving in the higher market cap stocks. Let's do like over 10.
Sounds good, dude.
Huh?
Sounds good.
Yeah. So you see here, NIO, that looks like it reported earnings up 8.8%. Royal Caribbean, that's up 6.8%. I think that reported earnings yesterday.
It did.
Yeah, so that's looking good today. So a couple higher cap stocks up, up in the morning here. So let's just come back to just the top gainers. And just for demonstration purpose, you could do this with any of these stocks. I'm going to just go up to the top one, EYEN, click on it just to get a deeper look into what's going on in the pre-market. So we see here, that's where it closed, $3.64. It's a biotech stock. Now in the pre-market, it's trading $7.90. That's up 117%. And we see that's a new 52-week high. This is the 52-week range, $1.11 to $5.06. In the pre-market, you see it's been trading as low as $3.80, as high as $8.04. So right now, very close to that high in the pre-market hours. Volume, 5.9 million shares compared to a float of 12.9 million. So on a relative basis, it's very, very active. This is what the chart looks like in the pre-market. We see the longest VWAP bar between $6.91 to $7.24 on 1.9 million shares. Here's the catalyst news, and you could kind of just see minute by minute VWAP. It's just kind of steadily been increasing. You could see for each minute, it's been trading a decent amount, every minute over, looks like to me around 150 to 200, 300,000 shares every minute. So very, very active in pre-market hours. Let's just take a look at its historical behavior, like what did the stock tend to do after a large gap move at the open, because at this point we're anticipating that this stock is going to open up, do a gap move at the opening price. And this is looking at the biggest 12 gap moves in the last 3 years. So this is 3 years of historical data, 12 biggest gap moves. We see here, these are the different gap moves. Here is the dates that it happened. If we pick up a potential catalyst, like here's, had a press release on this day, no press release, but the market was up big. So maybe that was up in sympathy with it. But in the last 12 biggest moves, we see that the average has been 13% gap. I see one of them as high as 52%, but I see nothing close to that, 117%. So you should kind of just take a look at the news, see, it's up to you to interpret that news. I'm just looking at it from a price action analysis. This is what it tended to do on those days that it had a big gap move. On average, from the opening to the high of the day, it was a plus 6.7%. From the opening to the low of the day, the average move was negative 10%. And we see here that 25% of the days it opened right at the high. So those gap moves, it opened, that was the high of the day. After that, it just dropped. From the open to the close, it looked like it was almost 58% of the time it was down, 42% of the time it was higher from the opening to the close of that day, with an average loss of 2.6%. Here coming out next day, 2 day, 3 day, kind of a mixed bag, looked like a little bit weaker on average, then maybe started to firm up later on. But this is really quickly a price action analysis on this stock. Again, it's a small cap stock, very liquid. You see that the range has been very high. So just showing you kind of an example of a price action analysis from a historical perspective. Let's come down here, and this view, this is what's been going on in the last 2 weeks for stocks that have been gapping up and gapping down, and we look at what tended to happen to these stocks after that gap move. We usually go from the gap up. Let's take a look from the gap down. So stocks that have gapped down in the morning, looks like 43% of them from the opening price to 10 a.m., that first half hour of trading at 10 a.m., 43% of those were higher from the opening price, 56% were lower. On average, they were pretty weak, negative 0.2% loss. By the end of the day, from the opening price to the closing price, 50% of them ended up being higher, 48% of them lower, some unchanged, obviously for negative 0.1%. So let's take a look at, I'm going to filter out, since this is our benchmark group, let's take a look at what tended to happen to low cap stocks, right? So let's say very low cap stocks under 100 million, let's say they experienced a really big gap move down, negative 20%. So we see here, there's only 5 of those observations actually, but out of those 5, we see that after gapping down 20% or more, 20% of them in that first half hour were higher, 80% were lower. The average by 10 a.m., though, it was kind of a break even. By the end of the day, 20% were higher from the opening price, 80% were lower. We could see an average 18% loss. So these are the observations in the stocks. So you could see here, this was the opening gap moves. So this one opened at 21.30, closed at 23.62. This one was higher on the day. The rest, you can see here, open was lower, open lower. So when they, at least in this group, low cap stocks under 100 million, gap down 20% or more, those tended to get even weaker and did worse than the benchmark group up here. So that's just a really quick example of looking at price action analysis, price from a historical perspective. Let's jump to earnings and see what's coming up on the earnings and what are the options anticipating. I'm going to go for next 2 weeks. Let's look up, these are stocks that are anticipating reporting earnings in the next 2 weeks. We're going to look at it from a options perspective of what option prices, what kind of move they're anticipating up or down, the magnitude of the move. Remember, options, it's volatility. So we're looking at it from the perspective, what is the expected move in either direction, up or down. I'm just using this filter that we're looking for stocks that on average trade 10,000 contracts or more, option contracts or more per day on average. So here, Kodak, that's been in the news a lot. Yes, you know, when way up, came down. I think it's come off, it's been coming off its lows, but that's anticipated to have earnings coming up after the market close right now. Straddle's pricing in 28.5% move. Obviously, there's lots of other things going on there. They might give clarity. So I don't think this is even, you know, this is an irregular period for that Kodak, but we'll see what happens. I'm not even sure if the historicals at this point have as much relevancy because things have changed, right? Well, you have to look at data as, well, if things have changed, other news coming out, then you got to start taking that into consideration. And that stock has been very volatile lately. LYFT, we talked about that yesterday a little bit, but that's expected to come out tomorrow after market close. That implied move is 12.1% in either direction. That compares to a 4-quarter average move of 10.2%. That's the actual absolute average move in LYFT in the last 4 quarters, and 10.3% average move in the last 12 quarters. So you could see a little bit above, 1.9% above the 4-quarter average, 1.8% above the 12-quarter average. The high move in the last 12 quarters, 21.7%. CSCO here, that's anticipated also tomorrow after market close. That's looking, as of yesterday's close, the straddle was implying a 5.4% move. Compare that to a 4-quarter average move of 6.4%. So now that's 1% below that 4-quarter average, and a 12-quarter average move of 5%. So almost in line, 0.4% above the 12-quarter average. High move, last 12 quarters, 8.6%. AMAT, that's also, that's August 13th. After the market close anticipated, that's expecting right now a move of 5.3%. That compared to a 4-quarter average move of 4.4% and a 12-quarter average move of 4.2%, which is roughly 1% over those averages. High move in the last 12 quarters, 9%. These are coming out a little bit later, so we'll get to them, you know, in the later shows. But these are kind of really quickly stocks that are anticipating move earnings coming up in the next couple of days.
AD, a stock that just had earnings, someone's asking about NIO. It's an electric car manufacturer out of China. And
okay.
Can you just explain how the vol crush can work? It was expecting, I think, like a plus 16 up or down move that Straddle was implying. And it looks like it's opened lower, so less of a move.
So he's looking at it from an implied volatility crush.
Yeah.
So over here, this is historically NIO. This is how the stock performed. I don't know if we have 12 quarters in here yet, but this is historically what the markets were anticipating the move. So these bars up or down, that's what the market was anticipating. This green bar, that's the actual move to the upside. Red bar, that's the actual move to the downside. So here we see so this is today reported, right? You just reported. Okay, so yesterday that was implying a move of 16.5%. Right now in the pre-market, it's up 7.7% within that expected range. Here we see one of these, it blew out. It was expecting 21% move. It was up 53.7%. But I'm just going to look here on average. The options overestimated the move 75% of the time from this sample, right? So 75% of the time it overestimated the move. It moved less than anticipated. The average of all the implied moves prior to the day of earnings was 18.7%. The average of the actual moves was 16.9%. So you could see they're about a 1.8% differential. Implied volatility crush, this is looking at 30-day constant maturity. So it's not looking at the near term. Everybody's looking at an option that is 30 trading days to go. Okay, the average implied volatility crush, or the average decrease in implied volatility the day before earnings to the day after earnings was 11%. So the average implied volatility was 126.7 day before earnings. Day after, it was 112.4. 5 days after, that's interesting. We don't see that a lot. It was 117. So it actually started coming back up 5 days after. So this is what it looks like historically. Yesterday, we see that it went out 133.3. Average was 126.6. High 155.5, low 98. The average is day after earnings 112.4. We see the high 176, low 77.2. So that's how it looked from a historical perspective. So we'll see today, how that goes. But right now, it looks like it's up 8% in the pre-market hours. Any other? Yep.
Yeah, we had actually, this was a shout out from our buddy Scott, longtime chameleon and an ex-floor trader friend of ours. He saw some unusual option volume in a steel company yesterday. MT. He was looking, it was a lot of, it was like 99% call driven. Maybe interesting to look at if you want to.
All right. So let's take a look at the options. Let's just look at I'm going to look really quickly at let me look at the summary of the trades, and then
he's a big user of the unusual option volume screener, a lot like our buddy Felix, and he's been using it for a long time.
Oh, awesome. So here's what I see right now. Yesterday, it traded in notional terms, dollar value. The calls $2.195 million worth of calls, $76,000 worth of puts, so way more calls than puts. The vast majority of them were right around at the money calls. 96.8% of them were around at the money calls. That's just like a really quick breakdown.
Yeah, I think that's what he one of the things he looks at if people are looking at those at the monies. And
let's take a look at the options chain. So we see here there's about 10,000 contracts traded August 14th, August 21st, 47,000. So that's where the biggest volume was, August 21st. And just looking at the options chain here, that right here, 44,877 of them were those August 12.5 calls. So now it's 1265. Let me just take a look. I'm going to open up the time and sales just to get a quick view what was going on in the options space. So here we see that the day before these options were closed at 13 cents bid, 17 cents offer. Yesterday, the close, so this is from August 7th, yesterday's close August 10th. We see that they increased, they went 37 cents to 39 cents. Implied volatility was also up. Stock was up yesterday. Implied volatility was up. Options were up. There were 3,403 different trades for a total volume of 44,879 just in this call alone. with $1.45 million worth of options traded in this, which is pretty significant considering it's not a very high priced option, right? This is the average price that option traded yesterday. Was average volume weighted average price that it traded was 32 cents. It was traded as high as 42 cents, low as 15 cents. That last price was 38 cents. This is where the implied volatility in that option was: high as 64.5, low as 40.3, last was 51.6.
Hey D, while you're on that, we're getting a question. Actually, someone who joined us in the Zoom is asking, can you tell if they're buying or selling the calls? How are you telling where the pressure is coming from?
So there's a couple ways people can try to interpret that. Now, one thing I'm just noticing is that these conditions here. So people take a look at this. See, regular trade, auto execution, regular. So that means that it's single leg trades. Because when you see this multi-leg trades, that means that there's another part to the trade. It's a part of a spread, so it would be hard to interpret that, right? Like, what's going on? Is it a straddle, strangle, whatever it is? It's part of a different trade. But here, these are just coming after individual trades because it's just a regular trade, auto execution. There's no other component to it. So that's one thing to look at. So some people, what they'll do is look at, well, what side of the trade did it sit? So this one is traded at 37 cents. Well, if the bid was 37 cents, offer was 39 cents, the interpretation is that the incoming order was a sell order, right? So because there was a displayed bid, somebody sent in an order, hit that bid, so they must have been in the sell order. If you do it on the offer, like over here, this traded at 39 cents. If the bid at the time was 37 cents, the offer is 39 cents, then this incoming order was probably bought it on the offer. So that's one way to look at it. The other way you could look at it as well is the implied volatility going up. So you could look at maybe the individual trades and try to interpret it, but what is going on average, right? So if we think there's a lot of trading, and if there are more buyers, an overwhelming amount of buyers than sellers, then we look at the options from a premium perspective. The premium should be going up, right? Because they're pushing the premiums up, and that's how we interpret, and that's how we measure it in implied volatility terms. So the implied volatility, you see, was up 15% in that option yesterday. So the interpretation of it is that there must be more buyers on average than sellers, right? So think of a stock. If, we cannot tell every single trade was it a buyer or seller, but if there's a lot of volume and the stock was up a lot, then the assumption is there were more buyers than sellers, right?
Yep.
It's pushing the price. And in option terms, we look at it in implied volatility terms. So, options, they have a delta. So even if the stock goes down, maybe the calls go down. But if the implied volatility is going up, that's also the premiums are moving higher. And we look at that by looking at those implied vol, the changes in implied vol. So implied vol, here it is. See, August 7th, the implied vol on the bid was 41.9. August 10th closed, implied vol bid 50.3. Here's the ask, 47.1. August 7th, implied volatility. August 10th, 52.1. So two things happened. The stock went up, so the option went up because it has a positive delta, but the option went up even further because the implied volatility, the premium, the relative premium is going higher. Is that?
Yeah, that's super helpful. We have someone who's looking at GM, wants to understand if they just reported earnings and the person's starting to get a little interested in the stock. They're wondering, how do you screen for a bullish credit spread? Looking out like 30, 60 days would be the time frame. Can you see anything?
Let's see if one just pops up as a, I'm going to go to the summary page and just see if in the trade ideas, let's just see if here's a bull put spread. A bull put spread.
Yeah, they're looking for something to take in a credit to put on a bullish position.
So here's one that came out. Now you could go and screen yourself. You know, these are just from our presets that came out. So here's one that yesterday popped out. So there's bull put spread August 21st, selling the August 27.5 put, buying the August 26 put. So that's $1.50 put spread. Yesterday it was a credit of 38 cents. Theoretically, we think it's worth 27 cents. So that's about a 11 cents edge, right? A little, because you're selling it above that theoretical value, or 9.6% theoretical edge. Historically, this, if you're doing it similar spread with similar situation, 38 cents, the same distance away, same distance away from the strike prices, same amount of days to expiration, it was profitable 73% of the time. So let's just take a look. I'll go to the options chain and just show you what it looks like. So when you click on that, it'll auto-populate in the options chain. So here's this August 21st. So it's selling August 27.5 put, 58 cents, buying the August 26 put, 20 cents. Load that strategy. And so that's what it looks like in GM. So if the stock stays here, you know, keep in mind there was the midpoint 40 cents, 38 cents is if you hit the bid. Always try to do it next to the midpoint. But here's the stock sits here, then and doesn't go lower, doesn't go higher, sits at the same price at expiration. You keep that credit 38 cents. Obviously, if it just keeps going higher, you keep that 38 cents credit. It goes a little bit lower, you know, could go, where was it? 27.98, goes to 27.5. You still keep that 38 cents credit. Obviously, it goes below 27.5. That's below that strike. So you got about a 38 cent cushion. So your break even is like right around there. If it falls out completely after that, you know, you get stopped out below $26. Below $26. So that's what that credit put spread looks like. If you wanted to change the parameter, you could always go to the credit put spread screener and play around with it. But that one was one of our hit our preset conditions.
Awesome.
Yeah, actually, if you wanted to read let me just see on the trade ideas. Let me see on the bull put spread. If you wanted to even read further about it, I think if you just pop open this report, this will kind of give you an explanation behind this analysis. So it'll show you kind of like, this is what the stock has been doing lately. So it's entering seasonally bearish. So to August 21st, historically from August 10th to August 21st, it's been more bearish than bullish. Right now, though, technically it's in a bullish crossover. Last 3 months and 2 weeks, it's been outperforming SPY. Last year, for the 1 year, on the 1 year, it's underperformed. It's kind of like a mixed bullish bearish. We kind of went over, we just went over this payout diagram. Could kind of read about these analytics down here, how we get that theoretical edge. So you get down, if you come down here, you could read more about it. Just open up that report. There's a lot more information.
Yeah, we just got notification from a new member, John, on YouTube. He says interesting moves in precious metals this morning. I just did a quick look at SLV. It's down 6%. So I don't know what's driving those metals lower this morning, but interesting. Thanks for giving us that look, John.
Yeah, thanks. So let's see. Well, yesterday, look, it hit a new high. It was up 3.1%. Not sure. Like as far as I know, they're still talking about the stimulus. They're still talking about printing more money. You know, so we'll see. I mean, that's what it is in the pre-market. Let me just take a look at
Yeah, well, anyone who's listened to our
Shares.
shows, we've had Chris Marcus on numerous times, and there are a couple of large holders of the silver. He's at Acadia Economics, and his whole focus is silver. And so you have one. If you believe what Chris is saying, which I tend to, there's some very large holders of silver. So if they decide to go to market and take some profits, it's going to move the product lower. So that's my 2 cents.
Good. So we'll see. I mean, there's volatility, anytime also things, volatility could hit, right? Volatility could hit and you could see movement in both directions.
And we know the way the skew plays in both GLD and SLV, as it goes higher, it's going to become more volatile, right?
Yeah. What's interesting, yesterday, it was up 3.1%, vol was down, and we usually see with the metals, right, as if it's increasing quickly, volatility is increasing. So yesterday it came in, but it's still pretty high. That's in the night, still went out 98th percentile.
Wow, that's really cool.
Yeah.
All right, we got about a couple minutes left, D. I don't know if there's one last thing you want to touch on to give the chameleons this morning.
Let me just take a look at for a couple minutes. Let me jump back to that home page and just see if I see anything. I think then that's, yeah, I thought I saw something, but no, I didn't. That must have been from yesterday. So nothing else to add, like for today, just to keep that.
We did have a question about when someone's screening for straddles, or they were asking how close to the at the money when they're screening is it to the actual at the money? Was what they're
he's talking about. I think he's talking about the straddles, at the money straddles.
Yes,
like this, right? So one thing with the at the money straddles that you first of all, you have constraints because they're, we don't make, you can't make up the strikes. The strikes exist, they're listed by the exchange. So, if the stock is here in Apple, $451.05, there's no such option as $451.05. So you're not going to get an exact strike 451.05. That's not, it'll move to 451.06. You're not going to get an exact strike 451.06. So you're trying to find the closest one. So what in Apple, the closest one right now is 450, August 21st, 450. You're never going to get an exact, if that's what you're trying to do, you're not going to even get it, but you're trying to get as close. Sometimes they'll be further away because if the stock's 452.5, it could be right in between. So you kind of have to pick which one, up or down. But you're trying to get as close as you can to the straddle. Now, people who trade straddles, if you do a delta neutral, you could just hedge off some of that delta. So obviously here, the stock's 451.05. It's a little bit above the 450 strike, so you're going to have a positive delta. What a professional trader would do is hedge that delta, right? Then you're delta neutral. So if you're worried about being delta neutral, hedge your delta.
There you go. Hedge your delta. All right, Dima, another great morning show. Thanks.
Okay. Thanks, everyone. Really appreciate you guys joining us. Hopefully we see you tomorrow. Thank you for all the emails and all the comments. Have a great day.
Keep it coming. Have a safe trading day, everyone. D, you have a good trading day. I will talk to you later for sure. We'll see you tomorrow morning, everyone. Stay safe.
Bye, everyone.